Hey there, and welcome to Doji Trading. I am here with another video. I'm doing the 5 do's for trading, my 5 do's. I did do a video on the don'ts, and now I'm back with the 5 do's. So just want to start off with Doji Chat and go over a little bit about myself. I'll do a separate video on this, but just wanted to give you guys a little bit of information. I've been trading for 3 years. I went full-time probably, I'd say, a year and a half. It took me a year and a half to go full-time, and it wasn't necessarily by choice at that time. It's just the circumstances with my job that kind of led me there a lot quicker. I would have done it anyway. That was the goal. But just, again, the circumstance just led me to it a lot quicker. And I trade large cap options. I did start with small caps, but then switched over to options, and I'm very happy trading options and large caps. I was not a fan of trading small caps. I have a few setups that I mainly focus on, and I'll do more videos on that. And really, I just am so thankful that I found trading. It was actually through a friend that had suggested it. And at first I thought it was kind of crazy. Who does that? How risky is that? It just didn't sound right. But looking back, I'm just so happy. Things happen for a reason, and I just love trading. Whether or not I was ever going to be successful at it, I just enjoyed trading. I loved learning about trading. When I wasn't looking at charts, I would be listening to podcasts, watching YouTube videos, so I was very into it from the beginning. I will, like I said, do another video going more in detail on my journey, but just want to start off and give you a little bit of information as well in this video. So let's move on to do number 1. Trade a small list of tickers. So right here, I can show you my list that I have right now. As you can see, what is it? 1, 2, 3, 9 tickers. And really, I think I had put one on Facebook. Yeah. Anyway, sometimes I may add one if there's something going on. There's like a really good setup. I may add to it. But starting out, especially, I was just trading 2 tickers. I was in the beginning trading Apple and AMD. Those were the 2 I mainly would watch, and especially Apple. I think Apple is a really good one if you're starting out. The spreads are nice. It's just very, I'd say, as far as patterns go, very predictable, and you can really get, I think, comfortable by just trading a few tickers, getting to know their personality, instead of kind of being all over the place. I see a lot of new traders, that's what they do. They don't even have a list. It's just going from one ticker to the next. And I think it helps with over trading. It helps because, you have your setups and you're sticking to those tickers and you're looking for those setups within those tickers. And I guess you could say, and I've heard this too, that you may be forced to trade because now it's such a small amount of tickers that if you don't see your setup, you're going to just jump in there. I didn't find that to be the case. It actually helped me be more selective. I think a lot of the times new traders, when they don't have a small list, they're all over the place so that they feel like they're missing out more. So they're jumping from one ticker to the next, and I just don't think it's a good idea. So I think trade a small list of tickers. It doesn't have to be 2. Let's say you even have 5 to 10. I would say no more than 10. But if you're just starting out, the smaller amount of tickers, the better. And so if I had to say, right now, I would go with Apple, I like MU, I think has been a good one. And even, having it in different sectors is good too. So, even BABA. And, trade one ticker each week and kind of get a feel for it. You will find that there are certain tickers you just don't like the personality, the way it trades. So that's the only way you're going to really find that out. But again, this is my list, and it works out nicely. And of course, I update this list from time to time depending on what's going on. I'll talk about some of my setups and things that I look for example, like an inside day. I think that's why I put Facebook there, because of the inside day. So do number 1, trade a small list of tickers. Moving on to number 2, let the trend develop. So this was a big issue of mine as far as trading the open, because I would be so quick to want to get into a trade, and I wasn't giving the time that's needed for the trend to develop. So you don't know which way it's going. You always hear this, the trend is your friend. There's a reason for that, because if you're jumping in so quickly, like here, it's open and you're thinking, well, look, it just broke through, all of this right here, and okay, it's definitely going down. Look at this big candle. So it's going to go down, and you jump in here, but then look, what does it do? Yeah, it goes up. So, I time and time again, that would happen to me, and I see it all the time with new traders in the Discords, that they are getting in way too early at open. Now, it works if you're experienced in trading the open. I'm not talking to you, obviously. There's scalpers, and and there's different setups at open that you may be looking for, and you're comfortable trading the open. But new traders, you need to wait. You need to wait until you see the trend develop. I really do think waiting to see that is key. So that's why they talk about being patient, because the quicker you jump in, that's when, right away, okay, now you have a red trade just to start the day, rather than being patient, seeing that, okay, now it maybe pulled back, but now it's going back up, and, it's over VWAP and DMAs. Okay, I'm going to find an entry now, or maybe there's a key level, something, but give it some time to develop, right? Don't be so quick to jump in, trying to guess the direction it's going to go. You don't need to be the first one in. Let it show you, let the stock show you which way it's going to go, right? Let the trend develop. Even here, when it bursts back down, you don't need to be the first. You don't need to say, oh, okay, here's the first red candle. Okay, must be going down. Let it show you. And for me, I am not going to, take puts unless, and I trade options, so I'm not going to take puts unless it's below VWAP. And I'm not going to take calls unless it's above VWAP. So even this, yeah, you could say, well, as soon as I, see it, the red candles, I could jump in right here and I would have been right. Sure, but are you going to be right every time? So, you need something that you can replicate. So you just getting in at any red or green candle isn't going to work. But, if you were to say, okay, I've got these 2 EMAs, it's breaking down, the EMAs. And so as soon as it crosses over this, I'm going to, make my entry. Or as soon as it crosses VWAP, I'm going to, enter the trade. That would make sense, because that is an action that you can replicate, right? You can say that, that's my setup. That as soon as these EMAs cross and cross VWAP, that's when I get in. So I just think it's important. Again, there's a reason you always hear the trend is your friend, and it really is. Okay, so number 3, have a consistent trade size. So one thing, I was trading on TradeStation. What was so great on that platform is that they had something where you could just put in the dollar amount. So let's say you want your trade size to be $1,000, right? I could put in $1,000 and it would automatically give you those number of contracts. It was really nice. I mean, sure, it's so easy, I can calculate in my head, but it stopped you from, oh, you know what, this one's going to be really good, I'm going to go big. Or I just lost, I had a red trade, I need to make up for it, I'm going to go double. You think that, oh, I'm just going to make sure, I do around 1,000. With that dollar amount button, and doing a hotkey especially, it really kept it consistent. And that's important because if you're going to have, and you really should be getting to a point that you don't have a ton of trades, because you don't need a ton of trades. So let's say for me, I try, roughly around 3 to 5 max trades. There's no need for more than that. If I'm doing more than that, then for me, I'm over trading. So having the consistent sizing matters, because if you're having one trade that is red and you went in with a size, 1,000, and then the next trade you're green, but you only went in with 500, you can understand the percentage depending on, how that trade went. It's going to be hard to keep that, as far as like the win rate, right? That people talk about, you see that you don't need to win 100% of the time to be profitable, right? So it could be you have 3 trades, that one red one, sure, you had that one red trade, but then you had 2 trades that more than made up for that, right? And keeping consistent, it's really the way to go, and do it from the beginning so that it's a habit. Now, as you get more experience, there's a lot of traders that say, hey, this is my A+ setup and I go in with this size, where the other ones I size down. But if you're not there yet, if you're not consistent yet, that's not the way to go. I would say make sure you have a consistent trade size. I think it's very important. Okay, do number 4. Let your stop lead your entry. So what I mean by that is that you should have a place that that if it moves in that direction, let's say it's a level that it breaks and it passes an EMA, or breaks an EMA, breaks VWAP, something to where if it does this, see, like the if it does this, I will do that. Those kinds of statements, right? If it breaks this level, I will exit. If it breaks over the 9 EMA, the 20 EMA, VWAP, I am going to exit, right? So if you know that, if I know that, okay, I'm taking an entry right here, right? It broke above VWAP. And I'm going to exit if, I know that in my strategy, in my setup, I will exit if it breaks below the 9 EMA, right? I should be thinking about that. So how far am I from that exit? That's really what matters, and that's where your risk comes in, right? So am I going to take an entry over here? Right here? I have no support there, going in there and see what happened. Look at that. Whereas if I said, okay, where I said before that I'm actually going to take an entry here with, let's say in this case, the white line is VWAP. VWAP is my risk. That if it breaks below, that I'm going to exit. But see how it's very small risk there? That's what you need to be thinking about. And so if you're just leading with your entry, I'm just going to enter here because it looks good. No. You should be thinking about, but where am I going to exit? And how close is my entry to my exit? Because that's your risk, right? You want to keep it as close as possible. Why wouldn't you want to do that? So that's really something to think about. Excuse me. Okay, so that's number 4. Let's go to the last one. Do number 5. Become consistent before sizing up. I mean, this is like an obvious one, but a lot of people don't realize, or they don't think about it. They're green one day and they say, okay, well now I'm just going to size up. You need to be consistent. And I'm not even talking about everyday green. You need to be consistent in your process. I mean, you need to obviously first know that your setup, your strategy has a good win rate, right? That it is profitable, in the long term, not over a period of days, but, starting out, I would look at it at the week, right? At the end of the week, the goal was to be green, right? I didn't do it by day, I did it by week, and that really helped me. But it was more about, okay, I'm green because I followed my strategy, right? That is what matters. So it's not about, so many times you'll see, traders post that they had a green day. Oh, I'm green again. That's great. And very excited about it. Yes, we're here to make money, but how did you get green? The how is what is most important. Are you able to replicate that action? If you're just green because so-and-so said, buy and it worked out for you, that's not the way. That's not how you're going to go and be consistent long-term and become a full-time trader if you want that. Being consistent is more than looking at if you were green for the day. It is, am I taking actionable steps and decisions that I can replicate, and that in the end, I'm basically have more green than red, right? More green days than red, and that it's something you're following on a consistent basis. I would want to be consistent with my strategy and be green for a month, at least a month, if not more. I mean, it just all depends on your account size and your confidence, but I would say at the bare minimum, make sure that you have it consistent for a month before you think about sizing up. And even then, when you size up, not going crazy, not doubling or tripling, go up a little bit. If you start out with $500, go up to $550, $600 maybe dollars total per trade. Don't right away go from 500 to 1,000, because what's going to happen is, yes, the gains will be larger, but so will the losses. And, that first time you see that loss, it's much bigger than what you're used to. It is really going to kind of, I don't know, for me, it kind of scared me. Like that whole fear came in of like, whoa, okay. And then the doubt is like, wait, because I jumped too fast. In the beginning, I did do that. And so I had to take steps back. So you don't want to do that to yourself. So just do it slowly. And before you know it, you will get there. So I think that's really important not to do that too early for a number of reasons. Obviously, you don't want to blow up your account, but again, you don't want to lose that confidence, more importantly. So, do it slowly. It will come. And it's important. Okay, I think my lights are about to go out, so I'm going to, close off for now. But make sure to subscribe and like for more videos. And bye for now.